All right. Hey, good morning, everyone. Thanks for joining live. Welcome if it's your first time listening. So I've hit the record button, and the way this usually works is we spend 20 minutes, we go over some fundamentals, we go over the technicals, and if you have any questions, please give me send me a text or use the chat function, and I'll try to see it and get it answered. Otherwise, if you're not on, if you're live, I always put the mute buttons on so that we can keep background noise to a minimum, so that the guys that watch this online can go ahead and hear it clearly. All right, so with that, I'll get started. Let me give you a quick backdrop of the fundamentals. There's really been nothing that's changed last week. The market's really, I think, focused on what the weather's doing in South America. And there's two different regions. There's the north part of Brazil, where they're harvesting soybeans and they are getting saturated, right? That just keeps raining and raining and raining. And so they continue to have harvest delays. And that puts pressure on their second corn crop, or their safrinha crop. So the best that I can explain that situation is that the soybean harvest is getting so late and it's so wet that they're going to be planting roughly half of their second corn crop, the equivalent of after about June 10th here. So you've got an extremely late crop in Brazil, but then the southern part of Brazil and into Argentina is suffering the opposite problem. They're very, very dry, and their crops are going into pollination, right? So you've got too wet where they're trying to harvest and plant, and you've got too dry where they're trying to pollinate. And the USDA has not accounted for any of those on our balance sheet. So if you look at what the USDA is doing, and if you look at where the USDA says our balance sheet is, you have to take it with a grain of salt, because the USDA is effectively putting a record crop from South America, from all of those regions, onto our balance sheet. And if you read the analysts and the estimates, the best that I can come up with is, call it 10 million tons, or roughly 350 million bushels of both corn and beans could be downsized off of what the USDA currently has from their crop size. Now, it could be more severe than that, but that's kind of the average. And I don't think that that's priced into the market yet. Maybe some of it is, but if you read the analysts, there's still guys that are talking about, well, yeah, their yield's going to be down, but they planted more acres than the USDA thinks they did. So those acres are going to pull that yield up. And maybe that's true. Maybe it's not. I don't. I think that's why we're paused, I guess, is what I'm trying to say. Is fundamentally, it just seems like we're waiting for some type of new news to go ahead and go. So with the recent weakness that we've had, over the last couple of days, why aren't we just imploding this market? I mean, if they're going to have record yields, and we're going to have record acreage, and we're going to have record yields, then what's the problem, right? Why do we keep buying this market? Why don't we just break it? Well, I think there's more to the story, because we don't know that we're going to have a perfect crop, right? We've got cooling temperatures on the oceans and the West Coast. We're dry here. Our crop is a long way from being in the bin. We don't know how many acres guys are going to plant and where those acres are going to come from. We don't know how the South American crop is going to come into play, but we do know that China seems to be hungry, and every time this market breaks, somebody steps in and just keeps buying it. So I'm going to start looking at charts here, and we're going to talk about the weekly charts, and then we're going to drill down into them. We're going to start with beans, and then we're going to go to corn, and then we'll finish with wheat. And I think the theme that you need to have in your mind is the trend is your friend. And there's been nothing changed fundamentally over the last several weeks that have dampened the bullish estimates. We are extremely tight, and we don't have any margin for error. And so even weakness is going to continue to be bought um, by large traders. And there's one more reason why they might do that, which is beginning March 15th, those large traders get to play with more money because their trading limits are expanded, and not by a little bit; they're being doubled in a lot of cases. So our fundamentals just continue to get underpinned by bullish facts. Okay, here's the weekly chart of soybeans. Um, uh, there is nothing weak about this chart. We are well above our cloud. Every line is pointed up. We're threatening to break out to new highs on soybeans. We haven't really even seriously tested the 9-week moving average, much less the 26-week. Even a break lower would really just present a buying opportunity all the way down to the $12 mark on front month soybeans. And you really don't want to fade this, because let's look back at history and tell you what we think is going to happen. Everyone's terrified that, the USDA is, we're gonna go back to trading a billion bushel bean carryout or 700 million, and so we're gonna go from 14 back down to 8, right? And we're just gonna V-top. We're gonna come straight up. We're gonna come straight back down because we're the American farmer, and that's just our luck, right? I hear that a lot. Well, let's look back. It kind of did it here, right? But think about what our balance sheet was in 2016. So we rallied to 12, and then we came back down to about 10, where we stayed for 3 years. Our balance sheet in here was over 400 million bushels. It was almost 3 times what we're talking about today. So let's go back to where you're comparing apples to apples and look at what might happen. And this is why you don't want to get overly aggressive to the short side. So even in 2010, right, we rallied from $9, we rallied clear to 14, and then we traded sideways for a really long time. I haven't counted how many bars this is, but it's basically January of 2010 clear through September of 2012. And we traded from 1282 to $14 in that entire duration of time. And then we broke the market hard. But guess what happened to the sellers in that market when our balance sheet was as tight as it is? They got their heads ripped off. I mean, they got just absolutely pummeled, and not by a small margin. So if you're thinking of selling the soybean market with a balance sheet below 200, with all of the fundamentals that we have, I think you're crazy, because even if we drop $1, beans can move $1 almost inside a day. Even a move down to here doesn't change the fundamentals. It's just a price reaction and a reactionary thing. So I think this looks really bullish. I think it's threatening new highs, and I think that we're going to push on up on another thrust up into here. Why do we think that? Well, let's look at the daily chart. Here's May daily beans. We've been trading this wedge for about a month. We broke out of it last week. We came back down and we tested the upper boundary of it. We've never threatened the midpoint of this range right in here, and we've never broken out the bottom side of it. So can we pop up out of here? You're absolutely right, we can. We had a false start here, so that gave the bears lots of ammunition, but we just keep getting underpinned by buying. There's no divergences on the MACD. This divergence was satisfied right here on this down move, and so we've got nothing to look at here except for bullish technicals underpinned by bullish fundamentals. And if we trade below 1365 in May, then that might open the door up to a trade all the way down into 1250. But you got to keep that in context with your weekly chart, which just sets up a buying opportunity, because that's just the sweet spot. A sweet spot is between your fast and slow moving averages, and we break right down into there on top of the cloud. That's the sweet spot for an entry point, not a sell. So if you think you can sell it, if we break below, you have no business selling it before above 1365. If you think you can sell it and be quick enough to get out and get back long, be my guest. I don't think you can be, because I think it's going to be a very, very strongly bought market if we break from here. I think the path of least resistance is up, and the path of most pain is up, because most people are going to get hurt with a higher trade, not a lower one. Remember, the U.S. farmer's out. We don't have any beans left to sell, really. And the South American guys either can't get it harvested, or they're worried about burning it up. Where is the wall of supply going to come from that's going to slow this thing down? I just don't see it. All right, so let's look at corn. Almost the same setup in corn, right? We're straight up. People are talking about, oh, we're bearish, we're bearish, we're bearish. What about this chart looks bearish to anybody? Yes, it can. Yes, I guess it could break, but the 9-week moving average is all the way down at 527. Your 26-week moving average is all the way down at 460 against the May. Everything about this chart is set up to run and work itself higher. So if we back corn up and put it in perspective of what we're doing, here's this big sell-off. Let me collapse just a little bit more so you can get more chart. Here's the all-time high up here at 844. We're trading right around the midpoint of that level, and we've consolidated at this midpoint now for 5 weeks. Given that we spent 7 years getting back to the midpoint of that drop, does 5 weeks seem like it's an unreasonable amount of time for the market to debate before it moves on up higher and into it? I don't think so. I think it makes perfect sense that it would pause right here and go. And you know what? It might even have to back up and get away from it for a minute to get a running start to get through it. The fundamentals here are just bullish. Well, what if China cancels on its commitments? What if they don't buy? Well, what if the moon lands on Earth? It might happen, right? Nothing's impossible. But if they cancel everything and don't buy any because they're all of a sudden found another 3 billion bushels of corn that they no longer need, that's bearish. No way around it. But until that happens, you gotta keep in the bullish mind frame, because this trend is intact and it's very strong. So let's look at the daily chart. Here's our daily chart in May. We're trading inside this wedge. It's almost the exact same setup that beans have. There's no divergences on this chart. We're inside this wedge. We keep getting underpinned as we trade sideways and lower. Now, these wedges aren't any fun. They're really kind of a pain in the butt. But if we break out to the bottom side of this, where are we going to fall to? Are we going to break 523? Maybe, probably not. Here's the low of this last major report day down here at 492. Are we going to drop that far? I doubt it. Not with all of these fundamentals. Even if we do, it's just the bottom of the cloud. This is all a buying opportunity, because guess what? Your weekly sweet spot is all the way down at 460. Anything between 525 and 460 is a sweet spot on your weekly chart to buy corn. So corn's got to break really hard, really fast, and have a radical shift in order for this thing to start a downtrend. So I have no interest whatsoever in selling it. This should be continued to be bought until we really just destroy this chart. Where are our targets? Well, if you use some extension tools off of Fibonacci, those targets are kind of up here in the $6, $6.20 range. And is that out of are those targets out of line? No, not at all. Especially not if South America's crop drops 400 million bushels, right? Do we have to get into our pollination season and find out whether or not we have a weather issue to get there? I don't think so. I think that's going to be traded out here in the December contract, which threatened new highs yesterday. And there's absolutely no weakness on this chart at all, as it keeps breaking out to new highs. So are we going to bid new crop up to new highs and sell old crop and collapse that spread? That's really out of character for a bull market. These things tend to stay inverted, and those inversions tend to widen, not shrink. So I don't think that we have a ton of new crop risk. And that's why we don't have any interest in selling it at this point either. This is a giant engulfing bar to the upside, and this should become the leader moving forward. All right, so let's look at our wedge, and let's look at the shorter term stuff here for just a minute. All right, here's a 2-hour chart of May corn. So this is the report day, all the way back on February 9th, right? This is the one where we had a bearish reaction. So we have a high of this one bar here at 571, and we traded all the way down to 543. That's a big, nasty, hairy bar. And then we came all the way down and we bottomed out at 523. So every trade that we've had since the report has been captured by this one move, right? And now what we're seeing is this tightening of the trading range. So we're getting higher lows and we're getting lower highs. This market is, some would call it coiling. It's just consolidating before it's going to push one direction or the other. And in general, consolidation favors continuation. Let me get back to this. So here's our triangle. This is a big move with no divergences. Consolidation generally favors continuation. And even a break, as I just pointed out, even a break was probably going to end up being false because of that weekly chart setup. So your daily chart, even though it may feel weak right now, it actually is pretty strong. And when you look at it in context of a weekly chart, it's very strong. Well, why do we keep bouncing from weeklies to dailies and changing time frames? Look, before you can move on a higher time frame, you have to first do it on a lower time frame. So we watch lots of them, but we don't want the tail to wag the dog. So we don't want to overreact to weakness on the shorter term time frames. We want to view them for what they are, which is just a setup on the higher time frames. And the bigger the move, the more historically significant the move, the more important it is to look at the higher time frames. If we're trading inside a 10-cent range, then your 30-minute bar is probably your most important time frame. We're trading in a multi-decade range here, and so we've got to use long-term stuff. And I know it's uncomfortable because when we drop 17 cents in a couple of hours, it kind of makes you want to hurl, and it tests our stomachs. But in context of that bigger trend, it's not doing anything. And I don't see a reason to abandon that opinion yet. So we're going to stay bullish. I don't think we should be selling any new crop yet. If we start knocking on $5, I know we're going to take some action up there. Not necessarily because it's the best trade, but because I know that everybody that's going to sell corn wants to defend that level. So I get that that's going to be an issue. All right, I got 2 minutes left. Let's jump to wheat right quick, and I'll just show you the daily chart here. We had enormous pressure, but we started getting bought yesterday in all these markets. So this kind of area down here at 620 continues to hold. The top of our cloud is holding until we break this thing lower and start working down inside this cloud. Or down out of the bottom of it. We're going to stay bullish wheat. I see nothing that's going to shift on that side. For now, it's going to follow corn. We start to warm up and we come out of dormancy and we get into April and May. Then it'll start trading its own weather as we find out how much damage was done and just what our yield might be. And we expect that volatility to go up. So I think that this high will get taken out eventually, but we'll back up and give it some time. Weekly chart of wheat, same thing as the rest. Keeps getting underpinned. We're consolidating. Consolidation favors continuation, and wheat it probably favors higher prices rather than lower prices over the next couple of months. All right, that is 20 minutes. I hope that was useful to you. If you have questions, please call. If you want to cuss and discuss, happy to do it. And we will talk to you next week. Remember, if you're trading this stuff, there is significant risk, and you should not trade beyond the level that you can afford. And you should talk to your advisor before you take any significant action. Have a great day.